Today, we are diving straight into one of the wildest mysteries playing out in the crypto market right now. We're talking about Cardano. On the surface, things look pretty grim. The sky is practically falling. But if you peek under the hood, there is this massive, quiet accumulation happening by the heaviest hitters in the game. It's a classic, fascinating paradox. We've got crashing prices on one side and feeding whales on the other.
70%. I really want you to just let that sink in for a second. Since the start of the year, Cardano's ADA token has plummeted by a staggering 70%. In the investing world, a drop like that doesn't just make people nervous. It sparks absolute, widespread retail terror. It's the exact kind of downward spiral that makes everyday investors panic, sell off at a massive loss, and swear off the crypto market entirely. Bearishness is completely running the show right now, and for the average person, it looks incredibly grim.
Which leads us to the million-dollar question, right? The whole reason we're doing this explainer today. If Cardano is crashing this hard and everyone is terrified, why on earth is big money buying? Why are the biggest investors on the planet running straight into a burning building? It makes zero sense on the surface. So, to really understand what's going on with ADA right now, we have to ignore the panic and dig into the actual data. What exactly do the big players know that everyday retail traders don't?
Section 1. The Great ADA Crash.
Okay, so to truly grasp what these massive investors are up to, we first have to look at just how brutal this crash actually is. Right now, ADA has sunk to a jaw-dropping low of 16.15 cents. Think about that. It means the asset is trading nearly 80% down from its absolute peak just a year ago. This massive downturn really kicked off at the end of May, and it has sparked widespread skepticism. Market sentiment isn't just a little negative today, it is overwhelmingly pessimistic. When an asset loses almost 80% of its value, everyday folks naturally start wondering if it's just the end of the road.
But hey, context is absolutely everything here. ADA isn't just crashing in a vacuum. We are smack in the grip of a ferocious, broader crypto bear market. The absolute heavyweights of the industry are bleeding too. Look at Bitcoin, tumbling from a high of over $94,000 down to about $64,000. Ethereum dropped from around $3,300 down to $1,900. And remember, those highs were just back in mid-January. So while Cardano is definitely taking one of the worst beatings in this current plunge, the entire market structure is incredibly fragile right now. Fear is totally dominating across the board.
Section 2. Enter the Cardano whales.
All right, here's where the plot takes a wild twist. While retail investors are sprinting for the exits, a completely different crowd is stepping up. The large investors, the whales. They're looking at this and seeing an untapped gold mine. According to the latest data, these institutional players actually recognize ADA as a highly viable play for the medium and long term. So instead of running away from a 70% price drop, they are quietly capitalizing on it. They're basically treating this massive decline as a giant discount window to load their bags at a fraction of the cost.
And they aren't just throwing money at some obscure, dying project. Despite the severe crash, Cardano still commands a massive $5.95 billion market cap. That keeps it firmly parked as the 15th largest cryptocurrency in the world, sitting right there behind Chainlink, Monero, and Zcash. We are talking about a multi-billion-dollar ecosystem here. The whales know that scooping up a nearly $6 billion valuation at a steep discount is just a prime target for heavy accumulation.
Section 3. Visualizing the takeover. So just how much are they actually buying? Well, market analyst Lark Davis recently shared some data that is honestly mind-blowing. It exposes the true scale of what's happening. Whales now control an overwhelming 68.76% of all ADA tokens in existence. We are talking about 25.1 billion ADA tokens held by institutional investors, leaving just 31% for everybody else. Out of the 36.5 billion total circulating tokens, the whales have undeniable absolute control. They have effectively swallowed up the vast majority of the entire market.
And this didn't just happen overnight. Let's look at the timeline. To find a comparable level of concentration among big investors, you literally have to go all the way back to July 2020. More recently, in May of 2026, whale control was sitting at 67.47%. But as the price kept tanking over the last few months, they just kept buying, pushing that dominance up to 68.76% by July 2026. This isn't just a slight bump, this is an all-time high for whale dominance on the Cardano blockchain. Institutional enthusiasm is actively rising while the price is falling.
Section 4. Retail fear versus whale greed.
Which brings us to the core of our paradox today, this massive psychological divide in the market. Look at the totally opposite strategies these two groups are using. On one side, you've got the everyday retail strategy. These folks are completely terrified by the price drops. They view a 70% crash as a sign of failure, they get uneasy, and they completely avoid the market to protect themselves. But then, look at the whale strategy. They are looking at the exact same charts, the exact same downward conditions, and they are quietly accumulating en masse. They absolutely love the lower costs. They literally feed on the exact same price action that makes retail traders run for the hills. It is a perfect illustration of how emotion and scale divide this space.
Section 5. An early bullish signal.
Which leaves us asking the most important question of all. What actually happens next? Market analyst Lark Davis looked at this exact data, the crashing prices meeting record-breaking whale accumulation, and he hit the nail on the head. He called this massive wealth concentration, quote, an early bullish signal for the market, a good sign for ADA's future. And honestly, think about it. When the biggest players, the ones with the deepest pockets and the most institutional knowledge, step in and buy up nearly 70% of a major asset during its absolute worst days, they aren't doing it to lose money. They are heightening their accumulation because they fully anticipate a major reversal down the line.
So, as we wrap up this explainer, I want to leave you with something to really chew on the next time you open up a crypto chart and see a sea of red. The data is crystal clear. The whales are quietly making their move while everyone else is panicking. The question you really have to ask yourself is, when the market crashes, are you reacting like retail or are you accumulating like a whale?